I want you to imagine a scenario. You're about to enter your home, and right before you turn the key, you get a message that says, if you're going home, whatever you do, don't light a match, everything else is fine. And you're going to think, what the hell? Is there a gas leak? Is something wrong? Can you tell me what is wrong? I need some context to this information. And your mind will automatically go to the worst case scenario. I feel like this is where all Indian citizens are sitting right now mentally, where we've been given a set of confusing instructions by our government. The Prime Minister telling us, don't buy gold, don't travel overseas, don't buy edible oil, we need to save the country, and giving us no context. So there's been no context about what the problem is. Is our economy in trouble? Why are we doing this? And at the same time, we're seeing fuel prices go up. We're seeing the stock market get spooked. We're seeing the rupee hit a new low on a daily basis. People are panicking automatically because your head is going to go to the worst case scenario. And you're asking, is our economy in deep trouble? Are the wheels coming off this thing? What am I supposed to do to keep myself safe? We have no information. So we're going to try and answer these questions in this video right now, because quite frankly, even I was asking, how did we go from Viksit Bharat, Vishwaguru, leader of the global south, to let's not buy gold for a year in the span of a couple of months? Is it just the war? And if the war is happening to everybody in the world, is India specifically in a bad place? That's what we're going to try and examine in this video with data, calmly, because that's our style. We're not going to panic, and there's not going to be any sort of, big statements made. We're going to break this down piece by piece. We'll look at all of the data and the pressure that our economy is under. We'll look at the government response and the options on the table for the government. And we'll finally look at whether or not our economy is in trouble, right? Before I start, please like, share, subscribe. Sign up for our membership, where we have this great offering where we are putting out a bulletin on a daily basis in 10 minutes. I'll tell you everything that's happening in the world that's relevant to you without any drama. Everything is fact-checked. Everything has context. Okay, so sign up for our membership if you can. We'd be grateful, and it would be great to have you join our, our exclusive club of supporters. Right now, let's take a look at what's going on with our economy. Now, I want to start off by looking at 3 quotes from 3 people. First, from the Prime Minister, who said this is a decade of a decade of disasters in the world. We can all see these conditions. If they're not changed swiftly, a large section of the world's population will be pushed into poverty. Rahul Gandhi of the Congress Party, the leader of the opposition, says there's an economic storm underway, and what is unfortunate is that the common man will suffer. Kaushik Basu, who's an economist, used to be an advisor to the government of India. He's advised many international organizations. He says the Indian rupee has lost 11.2% in the last year. This is not just because of the war. Net foreign direct investment has been zero for 22 months. If left unchecked, it will cause inflation to rise. So 3 people, the Prime Minister, the leader of the opposition, and respected economists, are all agreeing in a very rare event that trouble is in the wings for us, and that is reason enough for us to sit up and pay attention, because these people rarely agree with each other. Let's take a look at where that pressure is coming from, right? So the pressure points, first and foremost, is fuel prices. Why is this a pressure point? India imports 85% of its total crude requirement. This means that critically we're spending money on crude, and crude has become really expensive. It used to be about $70 a barrel before that war started. It's now well above $100 a barrel for a while now. So here's the arithmetic. According to India today, India consumes 5.5 million barrels of oil every day. So even a $10 increase per barrel, which means we will spend $50 million more every day on crude oil. And that is obviously expensive. Because oil is bought in dollars, we have to then trade in those dollars, and that puts pressure on our rupee. So the demand for dollars goes up and the rupee comes down, and that's what makes the rupee weaker, which is why you're seeing it go weaker and weaker. Today it was at 96.60 to the dollar, which is the lowest it has ever been. Just FYI, side piece of information, when we got independence in 1947, we were at 4 to a dollar, 4 rupees to $1. We are now at 96.60 to the dollar. And it's become an everyday story where we're seeing it go worse, one step worse. Now, one of the arguments that's been put forward is that it's not just India. The dollar and crude oil is expensive for everybody. Because of the Strait of Hormuz, the dollar is actually putting pressure on all currencies. But the rupee is Asia's worst performing currency in 2026. It has depreciated 7% in this calendar year. VK Vijay Kumar, who is from Geojit Investments, was quoted in Live Mint saying, if crude prices remain elevated for an extended period of time, the rupee will easily hit 100 rupees a dollar, and it will be a major drag because a lot of foreign investors are selling in the Indian market. So that brings us to the next question. Remember, Kaushik Bas also talked about what's happening with foreign investors. So the other thing that happens when the war started, foreign investors who look at India as an emerging market, as an alternate market to the big American market, pull their money out and go back to America where they feel safer. So the pressure on the rupee was intensified by the fact that foreign investors were pulling their money out. They pulled out $21 billion from the Indian stock market this year. And this is much higher than anything that was pulled out last year, according to Reuters. And analysts say this has become a major stress. I'll tell you why this happens. So when a foreign investor sells Indian stock and then takes the money back to the US, what they're doing is they're selling rupees to buy dollars, and that puts pressure on our currency because there's demand for dollars and rupees are flooding the market. So Anita Rangan, who is the chief economist at RBL Bank, says the rupee risks are more than what is actually understood by the market because people are discounting capital outflows. So she's basically saying we are focusing only on RBI intervention, but all of this is misplaced. The problem is that the RBI is running out of ammunition as to what to do, and that is why. So effectively the RBI is right now watching to decide if it's going to intervene and stop the rupee from falling further, or it's going to let it naturally find its level. What are the interventions? Let's look at what the government has done so far based on this situation. Gold. India has an average monthly import of 53 tons of gold. We've imported 83 tons of gold in the first 2 months of 2026. So here's the thing about India's import of gold. Indian households use gold as an investment. And so we import gold and we just lock it up. It's not a useful investment because when you put money in fixed deposits or in the stock market, that money then circulates in the economy, but the gold just stays locked up. But in value terms, even though our gold demand has nearly doubled year on year, it's doubled to $25 billion according to the World Gold Council. So the actual amount of gold has not changed that much, but the value has shot through the roof because gold has become so expensive. So gold and silver accounted for 11% of India's total imports. Crude and petroleum products are 22%. So what does the government do? They have increased import duties on gold and silver from 6% to 15%. So it raised the prices even further so that people will not buy gold. Now, a lot of experts are saying, though, still not enough. The union government has also banned the export of sugar in order to control the price of sugar in India. So if you don't allow a commodity to be exported, then you're flooding the domestic market and keeping the prices low. This is not great for people who make the sugar. They're not happy. Now, earlier, the exports were under a restricted category, but now basically they've said no exports at all until September. Then there's fuel prices, and this is where it becomes personal. Of course, according to SBI research, even a 2 rupee depreciation in currency significantly impacts crude prices, and we will have to pay that burden. So basically, crude has become more expensive, but we have to buy crude with dollars. So if the rupee depreciates further, not only has crude become more expensive, but we are paying more rupees per dollar to buy that crude. So it's a sort of double whammy, and it's going to make fuel more expensive. And that means they will keep raising the price of fuel. So it's already gone up about 4 rupees in the last 2 weeks. And there's a general expectation that it's going to go up even further. That brings me now to my next question. The war is happening to everybody. The Strait of Hormuz is closed for everyone. Is India worse off than other countries? And if yes, why? Remember, we are among the fastest growing economies, the large economies in the world. So what is wrong? Let's take a look at the data. The data will tell us that our economy, while it has grown really fast, that growth has been uneven, it's been lumpy and patchy, and it's been mismanaged. I'll tell you why. Take a look at household numbers or household savings numbers. And I like to look at household savings numbers because it tells you not just what the big economy is looking like. So when you look at the whole economy from far, saying this is our GDP growth, you're talking about the really, really rich cats who are making a large chunk of money. But when you look at household savings, you're looking at the average Indian household to see if they still have money in their hands. Now, this is very indicative. According to RBI data, Indian household net savings in 2020 and 2021, just after COVID, was 11.7%, which means we were saving as an average. Every household was saving about 11% or 12% of their money. It fell to 5% in 2022-23, in 20 years. It's halved, which means that there's no breathing room in our households. There is no savings. We're spending everything that we're earning, and that matters because families without savings become far more vulnerable to job loss, to inflation, fuel shocks, medical emergencies. Basically, if you have no savings and you lose your job, you have no cushion. If you have no savings, fuel prices go up, inflation goes up, you have no cushion, and that is really an indicator of whether or not our country has the ability to cushion such shocks. So in plain terms, families today are saving a lot less than they were about 20 years ago. The second big concern is jobs. According to the latest data, India's unemployment is at 5.2% in April, and urban unemployment is 6.6%. But it's not just really the big strokes. If we look at the data closely, it is also about underemployment. So this is where the gig economy work comes into play. People are getting jobs, young people are getting jobs, but they're getting low wage jobs. They're getting informal work with less security, and that is a problem. So the real question is not whether or not someone has a job. The question is, does that job create security? Does it give them benefits? Because spending confidence comes when someone has security and benefits. Now I want to give you a third piece of information, and this is the housing market. Niranjan Hiranandani was speaking to Business Today, and he made a statement that made me sit up and take notice. He said, and I quote, he has in his 45-year career never seen an affordable housing collapse to the extent that he's seeing right now. What does that mean? Let's unpack that for a second. Housing is a matter of confidence. If families are confident that they're going to do well, that is when they buy houses. If families are not confident and they don't feel secure, they don't have jobs, they don't have savings, they don't buy houses. Now, affordable housing, which is what Hiranandani is talking about, is specifically middle class, and that is where the real caution starts to kick in. You're like, okay, what are we talking about here? The consumption is weakening in that middle space right now, in the middle class, where there is no security of jobs and there are no savings. So he said specifically, and I quote, India cannot sustain long-term growth without addressing the housing needs of lower income people. It can't happen in India because you have to cater to that state, to that segment. So effectively he is echoing the fact that most of the Indian middle class does not have security in their jobs, and they don't have savings, and there's no confidence in that system right now. Now let's look at the manufacturing numbers. India for years has talked about being a manufacturing powerhouse, but according to data, manufacturing is only 12 to 17% of our GDP, and that's really low in a country like ours. Remember, during COVID, when there was a lockdown and a lot of the migrant workers got sent back home, they just joined the family farms. But agriculture does not have the ability to support such a large population. Manufacturing has not grown to the extent that it should. And all of these things together just shows that a large chunk of India's population is not making the kind of money they should be making in order to actually face the inflation that's coming their way. So if we look at the inflation numbers have been rising for 6 straight months. It is now at 3.48. That's not a very high number. 4.5 tends to be the RBI's comfort level. So for April it was 3.48, for March it was 3.4. And you're thinking, okay, that's not too bad. But these numbers are before the fuel prices were hiked. The fuel prices were hiked after the elections, which means the worst is still to come. And we'll see the impact of that fuel price on inflation from this month onwards. And it's going to be a lot more. So to recap to you, we have large number of households where we don't have high quality jobs, they don't have savings, and inflation is coming to get them. Because if fuel becomes more expensive, every single thing, every single article you buy will become more expensive, because they're all coming into our cities on the backs of trucks. So, in order to battle that inflation and to save the Indian households, can the government do anything? Can the government step in? Well, there seems to be a general consensus that the government and the RBI is anticipating that the currency could fall even further, which means that 100 rupees to a dollar is almost a given at this point. That's being expected. The question is, how much further could it fall, and at what point will the RBI step in? Now, Madhvi Arora, who is the chief economist at MK Global Finance, has basically said the hiking of import duty on gold and silver, these things are sort of aimed at strengthening the rupee, but it's not enough and it's not going to do the trick. She said there is room for additional policy action, and there's possibly they're going to have to do more, and we need to watch and see what that more is. Manoranjan Sharma, who is with Infometrics Ratings, has said a sustainable rupee not only depends on curbing non-essential imports like gold, but also stable oil prices, stronger exports, healthy foreign reserves, and so on. So it finally depends on the RBI as to how the RBI is going to solve for this problem. Has the RBI run out of cash? The answer is no. We have, like any other country, we set aside reserves of foreign exchange in case of bad times. India has about $700 billion in reserves right now. That is a handsome amount. It can cover our imports for the next 11 months or so. So we're not in dire straits right now. We've got a cushion for the next 11 months. And I want to give you a side quest a little bit. So there is a principle of economic management called the impossible trilemma, not dilemma but trilemma, because there are 3 points. Any central bank like the RBI has to trade off these 3 things. One, free capital inflows. So basically you don't want to, because you are a capitalist economy, you don't want to meddle so much and you want it to be a free market for your rupee, so you don't mess with it. That's one. Independent monetary policy. So you basically maintain an independent monetary policy that's not actually being influenced by politics and also not being influenced so much. You're not stepping in and changing so much. And 3, a fixed exchange rate. So you basically, the RBI will choose whether or not it wants to have a free market for the rupee, or it wants to step in and buy rupee and sell dollar in order to manage that level, and that is where that balance will lie. The RBI has up till now chosen mostly to preserve its monetary independence and to allow capital flows to move as is, and they haven't done too much. The question is, at what point will the RBI finally step in? Will India run out of those foreign exchange reserves of $700 billion? It seems unlikely. Remember, global trade is done in dollars and we keep those reserves. And if the rupee falls too low, the RBI has that option of selling those dollars to shore up the rupee. Geeta Gopinath of Harvard University, who is also, remember, the managing director of the IMF, she wrote an op-ed in the Times of India in which she said that the only way these reserves get depleted is if the RBI decides to sell forex reserves as a way to support the rupee. It will not happen purely because of imports. So one of the biggest problems that we're facing in the country right now is that we're importing crude oil, which is a huge bill. We're importing gold, which is a huge bill. We're importing fertilizer and edible oils. Now, these are huge, chunky things that India does not negotiate with. We have to have edible oils. We have to have crude oil. We have to have fertilizer. And the lack of fertilizer will start hitting our farm sector. So these are things we cannot negotiate with. Gold is the only thing we can negotiate with, which is why we saw the Prime Minister asking us, can you please stop buying gold and cool for a second, right? But according to Geeta Gopinath, even if imports put more pressure, we will not run out of forex reserves unless the RBI starts selling. So the question is, what is likely to happen next? If the RBI does begin to intervene, according to Madan Sabnavis of Bank of Baroda, he says the market perception is that the RBI will let the rupee find its own level because there is an advantage for exports, and will also put a natural barrier to imports. So one of the assumptions is that the RBI will do nothing and allow the rupee to fall, because that will make India attractive for the export market. One of the ways to manage a current account deficit is to export more. We're not exporting a lot because we don't manufacture a lot. So compared to other countries in Asia, we're not doing as well as we would like to do. And so if our rupee falls, that makes our products cheaper, and it will probably make us more attractive on the export front. That's one possible outcome. The other outcome is basically if the rupee falls further, it's a natural barrier. It makes crude, it makes fuel, everything more expensive. People will start using less, and we will start importing less as well. Let's come back to the first question that we asked. Are we screwed? And what does that really mean? And this is really the bottom line, right? This is what a failing economy looks like. In a failing economy, banks start collapsing. You have extremely hyperinflation, not high inflation, hyperinflation. You have capital controls, and the government starts telling you how much of your own money you can access and you can spend. The government will start defaulting. You have mass unemployment, and currency implosion will happen. So, is this a 1991? Is this Sri Lanka? Is this Argentina? I think the answer is safely no. India is a country that has $700 billion in reserves. We are not a poor country. We're not a country that's going to run out of money. We're not a country that cannot defend itself. So is the economy failing? It's a clear no. But are we exposed? Yes. Are we vulnerable? Yes. Are we making foreign capital nervous? Yes. And is our average household at this point financially weak? Yes. So we are at a point of concern, and we have been exposed, but that's not the same as collapse. Now let's answer the question of how do we get here so fast. We've been sort of beating the drum of being the fastest growing economy, or among the fastest growing economies in the world. And that's not untrue. The World Bank said we're growing at 7.6%, which is phenomenal. Just today, the UN estimated that instead of 6.6, we'll grow at 6.4. That is still phenomenal. So we're growing fast. But what is the problem? The problem is that the growth is uneven, and it could be hollow on the inside because it hasn't taken everybody along. It's what we've been calling K-shaped from COVID, which is basically the economy split in two. And the rich people became richer and richer and richer and richer. And the poor became poorer and poorer and poorer and poorer. And money is finite, which means the money has moved from the bottom of the pyramid to the top. So the money has been taken away from the poor and the middle class, who have all been driven further and further down. And the money has been moved to the rich. And that is what we're seeing right now. Those are the implications. So we pushed consumption, but we've not pushed household incomes. We've not pushed good jobs. We've not generated good jobs. We've built infrastructure, but we've not helped our exports. We celebrated our GDP numbers, but our youth is still largely unemployed. So that is what we've done wrong. We celebrated one headline, which we said, oh, our GDP growth is great, our GDP growth is great, but we did not look at the actual texture of the data that was coming in. And the austerity measures basically are not just about buy less gold to help us out. It's an admission of the fact that there is something seriously wrong with our economy, and we need to fix it. We import too much oil, we import too much gold. We've not done the strength training that we need to do for bad times. So we kept growing, and we said, oh, we're fantastic, let's just grow, let's just celebrate our headlines. But we didn't build a reserve for our oil. We didn't build a reserve for our, for our LPG, CNG needs. We didn't find alternatives. So we're not behaving like a large economy. We're behaving still like a small economy that has sort of ballooned, and we're not really that big. So are we collapsing? No, we're growing really fast with big structural weaknesses, and those weaknesses are becoming visible in this global shock. One of the things that I've been asking for the last several days is that, and this is something I took up greatly during COVID and even after COVID, because during COVID what happened is the whole world went into lockdown and the price of crude crashed. But the price of fuel in India did not change. So they didn't reduce the price for us. We continued to pay close to 90 odd rupees when crude was half what it is right now. And that large chunk of tax was absorbed by the government as a windfall profit. I want to give you an example. Petrol excise duty. So basically what the government did was they were making 20 rupees or so as tax on petrol. They increased it to 33 rupees. On diesel, they were making about 15, 16 rupees. They increased it to 31 rupees. And it was a massive tax grab, right? So in FY20, the government made 2.2 lakh crore rupees from this extra money. In 21, it was 3.7 lakh crore rupees. And in 22, there was a peak of nearly 5 lakh crore rupees that the government made from this extra money because crude oil prices was low. Now crude oil prices is high and they're like, oh, we don't have any money. Where did the money go? Because, I mean, this is a question you're going to ask anybody, right? Did you spend it all in one place? Where did the money go? Where was the money that we've been giving you for the last 5 years? Did you not save it? The answer is no, we didn't save it. We spent it, and this is what we spent it on. We spent it on capital expenditure. Large plans of roads, railways, airports, logistics, public capex, the idea that we'll build these big infrastructure, we'll grow later, let's build big infrastructure. And supporters say that this is, there are two arguments to this. One group will say that this is great economics for the long term, but critics will say that you have a lot of work to be done for health, for education, for job creation, for building a system where your graduates are actually job worthy, for investing in your structure, which you have not done. You've just built big infrastructure. So there are two ways to look at it. So we spent all of the money on that. We also spent all of our money on direct transfers, free rations that people are getting, money that's hitting people's bank accounts directly. So again, there are two sides to this story. There is the idea of minimum support, where we are able to help people put food on the table, and on the other hand, should we be using this money to create more jobs and create more stability and shore up our education sector, shore up our health sector, so that we have a more healthy population. The other big problem is, of course, tax cuts. Remember, in 2019, there was a corporate tax cut. Corporate tax was cut to 22% and 15% for new manufacturing companies. That was a revenue loss of 1.45 lakh crore rupees per year. In the budget of 2025, there was another, income tax relief, which costed 1 lakh crore rupees in direct taxes. So between these two decisions, 2.4 lakh crore rupees was foregone in tax revenue. Did the economy benefit? The assumption was that if we cut taxes for corporate India, they'll have more money on the table, they'll invest it, so factories will expand, jobs will rise, incomes will rise. That is not how it worked. The private sector just swallowed the money. So what they did is they made more profits. They did not hire more people, they did not expand their factories, they did not actually invest any of that money. So regularly, like the economic survey of 2024-25 said, corporate profits have soared, hiring has remained low, wage growth has remained low. So they didn't increase anybody's salaries either. So the government gave up revenue. It kept fuel taxes high, so it was collecting more money from us as taxes. It gave up its own revenue as corporate tax, and it built visible assets of roads and railways and airports and logistics, but it did not create good jobs, strong wages, good consumer demand, export strength, and a cushion against oil shocks. So where is that cushion now? Well, we don't have it. Money has been spent, it has not been parked. So the question to ask right now is, if the rupee gets weaker, if things continue the way they are, what will happen? If this war drags on, India enters a much more uncomfortable economic phase. So it's not Armageddon. Everything's not going to go up in smoke, but it's going to become uncomfortable under the collar for a lot of people. Fuel will become more expensive. That's the first thing, which means that aviation fuel will become expensive, freight costs will rise, electricity will rise, logistics will rise, everything will become more expensive. Inflation will return. We import, remember, fertilizers, edible oils, electronic components, machines, farmer inputs. The weaker rupee will make all of this costlier. Food will become more expensive. Household goods, travel, imported products, everything will become more expensive. The RBI may be forced to act, and what the RBI will do, along with selling dollars, it will raise interest rates. And when interest rates increase, it will become more difficult to buy homes. It will become expensive for businesses to borrow and conduct business. You'll have weaker investment. You'll have slowing GDP growth. Then as fiscal pressure comes up more and more, the government will have choices which are not pretty. Choice number one, they cut fuel taxes to protect customers, but then that means that they have no revenue. Choice number two, they keep fuel high, and then voters are angry, which is not a great political thing to be, position to be. So they will have to choose which way they want to go. And then, of course, as things get worse, the stock market will get hit, growth will slow down, more money will leave the market, and so all of the good things that we've been celebrating up till now will start to shrink. even in our worst case scenario, and I want to draw a line under this, even in our worst case scenario, with the information that we have right now, it does seem like the worst case scenario is that you'll have very high inflation, you'll have emergency fuel management, you might have very aggressive RBI intervention, and growth will slow, but that seems like the worst of it. It doesn't seem like worse than that. But the caveat that I'm putting at the bottom of this is that this is with information that we have. Unless there is something that the government is not telling us or has not told us up till now, this is the information that we're looking at right now. So we're not at a position where India is just going to fall off a cliff or we're going to collapse. But it's going to become more and more uncomfortable. All of the things that we've been celebrating up till now will start to dry up if things don't improve. Of course, the immediate relief will come if the war ends and the Strait of Hormuz opens, but that doesn't change the fact that the beautiful growth that we're celebrating on the outside is hollow on the inside because it hasn't taken most Indians along. Leave me a comment in the comment section. We're trying to get some big voices to talk to us about this as well. I'm going to try and get more and more voices. I believe that this is something we all need to understand a little better. But do you think that the government is handling this well? What do you think the government should do going forward? Leave me a comment in the comment section. We can talk about it some more.